everybody, Josh Sigurdson, World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen, and it's about time that we get back into some Canadian news because, of course, in second place for all of our viewership, it is Canadians, and we appreciate that, being in Canada, of course. And there's an article out of the Huffington Post, which I think really stands out, considering some of the things that we've talked about over the past while, you know, the return of collateralized debt obligations, mortgage-backed securities, reverse mortgages, stuff we saw in 2007 teamed with bank failures, and of course the central banks constantly out of desperation trying to raise interest rates. And as this article from Huffington Post says, Bank of Canada's Stephen Poloz suggests buying a smaller home after hiking interest rates. And as it goes into, the governor of the Bank of Canada, Stephen Poloz, had some advice this week for Canadians facing higher housing costs thanks to the bank's interest rate hike. Just buy a smaller house. And I quote, "People who don't qualify for a mortgage on the house they wish today have multiple avenues of adjustment," Poloz said during a press conference announcing the rate hike. One of them being to just go ahead to buy a smaller or less expensive home. One, perhaps cynical way to view his comments is, you're on your own. The Bank of Canada isn't going to stop hiking rates to save you money on your mortgage payments. And we've seen serious problems within the housing market in Canada in recent days, especially, you know, Toronto, Vancouver, to name a few. But I mean, these are ones that are infamous worldwide. You talk to anyone that's not Canadian and they'll go, housing market, Canada, Toronto, Vancouver. And we've reported in recent days on how, as we had predicted, the peak of the Toronto housing market seems to, or appears to have already happened, as well as Vancouver. We are seeing a massive dip in Toronto especially, and people are moving to condos rather than detached homes, and it's a big wake-up call that, hey, people can't afford this anymore. They're getting the cheaper stuff, and with this happening in Canada with the interest rate hikes, it's true, as Huffington Post said, you're on your own. You have to go and buy a smaller home if you don't expect to want to pay an insane amount and possibly get involved in a massive bubble. So, John, what do you think about Stephen Poloz's most recent comments and what the Bank of Canada is doing, raising interest rates nonstop, centralization? What do you think?
Well, it's funny to actually hear moderation from a central banker. It's pretty hilarious, actually. I can't stop giggling about that. So that's of course the first one. But talking about the another big thing that's happening in the house market, actually in a lot of countries, is not only what we see in Canada. You were saying people are moving into smaller homes and so on. The number one thing too is that people are actually retiring and they want to sell their house because they want to retire. And unfortunately, a lot of people are 100% dependent almost on their retirement from their house because they believe that their house was an asset and they believe that the house was going to constantly go up in value.
And Robert Kiyosaki has a lot to say about your house is not an asset, folks.
Well, yeah, your house is not an asset. If you are paying more for your house than you get in income from your house, then it's not an asset, guys. And you gotta have to understand that it could be an asset in the way that you bought it and then you sell it for a higher profit.
Yeah, but after the fact.
But you have to actually sell it before it becomes an asset. It's not an asset until you actually made a profit on it. So that's another BS thing. And then, of course, like, we're looking at the interest rates here in Canada, and I'm looking at the chart. This is just the government 10-year bond. And we're seeing the yield curve flattening in Canada as well. Between the 30 and the 10-year, it's only 5 basis points now, so 0.05%.
So more so than the United States.
Yeah, actually more in the United States, which is about 9.5 right now. So it's Canada is leading the pack on who's going to crash first in the global economy. And of course, Canada has been propped up by so much quantitative easing and all these buying of assets that have been so unsustainable. The central bank has, of course, not been willing to deal with the problems that they had. And the banking system here in Canada, nobody says anything about, the banking system here wasn't bailed out. Yeah, they definitely were. If you look at the TARP program, all the major 5 banks got TARP money through which got funneled. And I talk about that in my book, Canada, the greatest economy in the world?
Question mark.
Yeah, and the question mark comes upon what we're starting to read about now in the news cycle. A lot of my book is starting to come into fruition because it's pretty obvious if you look at history that if you get into too much debt, there's not going to be enough money in order to pay off the interest on that debt, and then people are going to start running bankrupt because
Yeah, and you're seeing the rise of dependence. Unfortunately, this is one of the major things that we talk about here at WHAM is that we need to be independent. And when we're looking at, for example, you mentioned the pension schemes, the Ponzi schemes that are happening, the Canadian a Ponzi plan or pension Ponzi, as you've mentioned before,
exactly.
John.
It's in my book.
Yeah, exactly. And when you're looking at something like that, we recently looked at a study that showed that by the year 2050 that we'll be looking at a $400 trillion shortfall in pensions. And I believe that's the United States, but that doesn't change
the fact. The world. But anyways, it's,
that's right. That's the world.
It doesn't matter. It's a massive shortfall all over the world.
And that's more than 4 times the entire global GDP. So just think about that for a second. How is that sustainable? And then you look at the same time at they're looking at an average of probably an age of 107 on average for people born in 2007. That's like an entire lifetime, considering today, of paying an average wage constantly on the taxpayer dime.
That's not the worst part, Josh. The worst part is X amount of workers versus the actual retirees. Because when they created those systems, it was 10 workers per retiree. But today, it's actually it's going to be very soon. I think by 2020, I was looking at Mike Maloney's new wealth cycle, which I highly regard. You should look at his new predictions, his alert. He sent out an alert to investors about the common economic calamity. But what he was talking about in there is the demographics have shifted so much from when they had these pension Ponzi's that they had a 10-to-1, 13-to-1, per workers per retiree. But now it's equal almost. Yeah. So it's so unsustainable.
Yeah, and at the same time, we see young people, millennials, are heavily in debt, heavily dependent on their parents, the banks, the government, the usual stuff, all while their parents, the baby boomers, are the biggest spenders into the economy. And then they're slowly, people are dying. They're, it's going to happen eventually. And that part of the economy is going away while these kids that are dependent on their parents are, they're going to university, getting into debt, and then they don't have a hope for pensions. And anyone that's my age that expects to get a pension, it's not going to happen. You have to save for yourself, as it always should have been in the first place. Responsibility.
Yeah, exactly. And the worst thing about this is, of course, the pensioners are in need to sell assets in order to actually get cash flow out of their pension accounts. So what is happening there too is now they got to sell more and more rapidly, more assets, stocks, bonds, whatever it is. And that's not good. Like, who's going to buy all that stuff? Well, maybe Poloz is going to, start printing some more money. I think that's the only outcome that is going to happen, is that they're just going to continue to print more and more money to, buy up all these assets, and then they'll, own everything.
Yeah.
And then nothing.
Exactly. And that brings me to my point about, when we see them raising interest rates like this, we see that they're heavily attempting to stabilize that which cannot be stabilized. And it's very unstable. And that's what happens in a fiat empire, whereas all fiat currency eventually reverts to its true value of zero, always has, always will. Going back to 1024 AD and in China. And at the same time, we see vast taxation, vast regulation in Canada at the same time as we see them trying to prop up the interest rates. And then we're slowly going cashless. 12% of people in this country actually go to a bank in person. The rest do it digitally, and that's slowly getting worse and worse. They don't want to go into negative interest rate territory, but they can, and we've seen that in Sweden. I believe there's one other country where they went negative.
Oh, no, there's several. There's Switzerland, there's Denmark, Sweden, Japan, and then there's a lot of the European Union is negative as well.
Mm-hmm. I was having a conversation about this with someone the other day, and they're like, well, how does that work? What, are you paying them? Like, it just...
Well, no, you're not going to get paid as an individual. Actually, I think we reported on how a bank in Denmark actually, by an accident, did a mortgage with a negative interest on it, which it wasn't supposed to happen, but it did happen. And it's just ridiculous. It just shows you how stupid this policy is. The thing is, they want to have first a cashless society, because then that's when it can move into having negative interest rates, because then you have all your money in the bank, and then you could just have a -5. They've been talking about -4, -5% in order to, take money out of your account to then recapitalize the financial system to try to save it.
Well, this is exactly what happened in Sweden, as a matter of fact, and now they only 1% of their money is in cash. The rest is centrally planned cashless. I gotta put that centralization point in there because people confuse it with Bitcoin. Anyway, but I think it's really important to mention how horrible this is for any of us that are living then dependent on the state and the banking system, because if your money's in the bank, it's not yours, it's the bank's, and if your money's always going through the banks via digital transactions, fiat, legal tender laws, then it's never your money, it's always the bank's, and you are dependent on the banking system. And looking back in the United States after 2008, they dropped interest rates 5.5%, and this time they will have to drop it a lot more in the coming calamity, which is inevitable. You can't put a date on it. It's impossible. Fundamentals are off the table due to the level of manipulation in the monetary system as well as the markets. But with that said, you know it's coming. And when you see a 5.5% drop from 2008, I believe, to 2012, how much are they going to be dropping it in order to sustain it this time around? And we see both Canada and the United States trying to prop up interest rates as much as they possibly can out of desperation. And, when we see Stephen Poloz saying, well, maybe you should just buy a smaller home, I think it's about time that you as individuals look at being independent and free and self-sustainable. It's incredibly important to be responsible, especially considering the pension situation as well. They want you dependent on them to save for you, and they are dependent on your dependence on them. And I think that it's so important that you break free from that and decentralize and look at ways that you as an individual can save for yourself. Gold, silver, in my opinion, cryptocurrencies that have fundamental values. Of course, most don't, so make sure to look into that, because they are a game changer. But at the same time, there are a lot of scams and bad ideas out there. Like in any bubble, we saw the .com bubble. There's Amazon, then there's pets.com. Amazon survived. 10 years later, it's grown more than almost anything ever, and Jeff Bezos is now, I think, the richest guy ever, back and forth with Bill Gates. But look at, the internet didn't disappear after the .com bubble, folks. It was the fundamentally terrible ideas that had a whole bunch of confidence but no actual fundamental value. And that is where it sits. So you have to do your own due diligence and be responsible, because responsibility is a hallmark of freedom itself.
And then there was gold, and then there was the fiat bubble, and then after fiat bubble comes gold again. So it's all about these bubbles, and see who has fundamental value at the end of it. And that's so important for you to understand throughout history, is make sure you understand what fundamental value is. And if it has some fundamental value throughout crises, you want to have things that actually contain its value, and that's things that we use for everyday use. Any commodity in the world has fundamental value because it has use. It has a lot of potential to save you throughout a big crisis in the economy. Just look at any big crisis that I've studied. Every single time commodities won, and the fiat paper died and was used as trash, or the fire.
Yeah, and it's interesting because history in the free market shows what has value is that which is scarce and has application, use, and demand within it. And
surprise.
Yeah, and it's very important, and that goes for everything in the market. I kind of equate it in a way, and this is kind of silly in a way, but looking at, for example, Subway, the restaurant Subway. So they put out for like 3 weeks a year pulled pork sandwich. Now it's their most popular sandwich by far, but they only do it 3 weeks a year, and you have to wonder, what, can they not get enough pulled pork? Can they not do? Of course they can. That's not the issue. They just know value is scarce, and of course with that comes a lot of demand, and they are able to use that in order to make a big money like once a year. there. And Quiznos copied them and does the same thing, and in direct competition with Subway. And I think it's interesting when you consider that no matter what it is, if it's more scarce, it's more in demand and has more value to it. And I mean, gold, it takes supernova to really create vast amounts of gold. And you know, they can artificially create gold, but when you artificially create gold, it costs more money to make than it is to sell it. It's pointless, and maybe that one day they'll get around that, but it'll just make gold less scarce, and then the value of gold will go down.
Well, but yeah, it would be like Marco Polo and the Spanish bringing you know, gold and silver over to Spain, making the supply, you know, quadruple, and then it dropped in value.
Yeah, exactly. So, and Canada is one of the most centralized places you can imagine right now. It is a slow, watered down frog boil to ultimately communism, but overall collectivism. And the collectivist empire grows. It's an organized crime cartel that constantly depends on people to bend the knee and fall to their knees and beg for more and more and more until they continuously create the problems. That you have a reaction, then you have a solution, so they implement more problems to aid the you know, the reaction, and it just goes around in circles forever. It's a Hegelian dialectic of problem, reaction, solution, repeat, and it's never ending, folks, which is why it comes down to individuals, not giant collectives that force their will on the minority or the majority, or it doesn't matter. You cannot use force. Good ideas do not require force. The market speaks for itself. The individual demand of you, the individual, speaks a lot louder than some centralized authoritarian power that has always led to chaos and destruction. So I think the solutions are pretty set in stone. Yeah, we talk about the problems here, and we're giving you an idea of what you as an individual can do for the solution, so we don't repeat and go into that circular, you know, perpetual paradigm for the rest of history. I think it's really important that we break free from this ourselves and don't expect others to do it for us. John, what's your bottom line?
Legalize weed. No, sorry.
Yeah, that'll fix it all.
Actually, they should decriminalize everything that has to do with any drugs here in Canada. No, let's get back to seriousness. So what's happening with the mortgage industry? If you are locking in a mortgage right now, I would highly suggest you lock in a mortgage right now, because that, as I said, you know, about 30 years ago, that rate was 12%. So if people believe today, oh no, it's never gonna go that high. Well, it could, and there's no saying that. Why wouldn't it? Because what you got to remember, the central banks can't really 100% control the interest rate. They could fake it, but the free market, which with trading and so on, it will actually want to set the interest rate at what the market interest rate should be, and then suddenly that's why you had like 12%, and I think we can potentially see that again. And if you have a house, and even today I was reading articles like how are we going to survive 0.25%? Yeah. It's like, it's ridiculous. This is, you know, very dangerous place to be in. And remember, your house is not an asset. And just start to protect yourself with what me and Josh discussed here in this video. Yeah, absolutely. And we always say, this is our opinion, not investment advice. You have to do your own due diligence. It's more important than ever for you to not just believe anything anyone says, but go out and work for that information, educate yourself, because with education comes true ambition and change from the individual rather than a giant collective you end up suffering independence to until you hit right through the rocks, right to hell, because that's really what this all results in the end, when you are dependent on a massive criminal cartel we call governments, central banks, and banks. So I think that's pretty important to wrap it up. So thanks for going into this with us, John. And until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth, be the change. Like what you see here, OM? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so overwhelmingly demonetized by YouTube as they bring in the ADL to flag all of our content as hate speech. Also check our Bitcoin address in the description as well as on the screen for you to scan if you please. And also check us out at Steemit at Josh Sigurdson, the future of social media, where you get paid in the upvote of your post in cryptocurrency, Steem that is. So don't forget to check us out there, and find us at Anarchapulco 2019. I know it's early, but this is such an exciting event coming up with Ron Paul, Judge Napolitano, David Icke,
Larkin Rose, Jeff Berwick, all the usual characters, and it's going to be amazing. So we hope to see you there. Make sure to check the link for Anarchapulco below and use promo code WHAM to save as much as 15% on your tickets. We hope to see you there. But until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.